morning, Till. How are you doing? Thank you very much for joining me here today.
Very well, thank you.
So, today we announced our Q3 results for 2022. And I think it's quite good, obviously, when you see the progress quarter on quarter. Are you seeing the progress that we wanted?
Indeed, we've made good progress and we've got a strong set of financial results. In the third quarter, we've reached 1.2 billion euro of revenue. That is 87% of 2019 revenues already. And EBITDA reached 450 million euro, close to 80% of 2019 levels. And EBITDA margin, 37%, and that is a 9 percentage points expansion compared to Q3 last year. And free cash flow as well, it was very strong. We've reached 320 million euro, and that helped contributing to reduce our leverage. And very pleasingly, in terms of net debt to EBITDA, we've reached 1.6 times net debt to EBITDA.
Okay, so let me hone in on that. Net debt to EBITDA ratio. Why is that so important right now, and why did you highlight it?
Look, Neil, it is important because we've got a target range, and this target range is 1 to 1.5 times net debt to EBITDA.
Okay.
And we consider it to be a healthy ratio, sustainable, and also supporting our investment grade credit rating. We are today fairly close to this 1 to 1.5 times net debt to EBITDA. And that's good progress if you consider what we've gone through during the pandemic. And it is equally a very important ratio in the context of our intent to come back to shareholder remuneration next year.
So then, if we go a bit more into some of the KPIs we reported, air distribution bookings, from an operating performance, how did the quarter go?
Look, the third quarter started off with supply-related issues, mainly in July. You remember there were flight cancellations or airport capacity constraints, and that impacted the third quarter as well. Also, working day differences. Normally between the quarters and the months, they tend to offset each other or don't have a meaningful impact. However, if you exclude these cancellations and workday differences, so you think of our gross daily bookings, they continue to improve in the third quarter compared to the second quarter. In terms of regions, North America was our best performing region, reaching already plus 2% compared to 2019. But also APAC. APAC still has got a lot of potential to grow and hasn't reached yet 2019 levels, but it did saw a strong performance improvement compared to the second quarter, and we added 4.5 percentage points of improvement or gains compared to Q2.
Okay, Till, so then when we look at Air IT solutions and volumes there, we've also made progress, right?
Indeed, we've seen good progress made there, and months on months during the quarter we saw improvement, and we've reached for the quarter already 84% of 2019 levels, and that is an advancement of 6 percentage points compared to the prior quarter. And in terms of regions, also there, North America, very strong, reaching already 21% of growth compared to 2019 levels.
Okay, so then let's look at a final KPI, I think, and that would be hospitality. Are there any trends or figures you'd like to highlight there?
Yes, we have mentioned in previous quarters that hospitality actually outperformed the airline industry, and that is also true for the third quarter. We have reached already almost 99% of 2019 Q3 revenues, which is very pleasing. And we've seen good growth across all revenue lines, due to volume growth and also new and additional customer implementations.
So that's really positive, Till, and especially when you think back to June, where we were having conversations about airport capacity issues and macroeconomic topics. So let's look ahead. Can you give a view on recovery or where the industry's heading now and into 2023?
Look, Neil, all our conversations with customers and partners are positive. There's optimism in the industry, and that optimism goes beyond the recovery. It is about future growth. However, it is very important to say there are macroeconomic uncertainties, and therefore it is difficult to make any short-term prediction. We are monitoring the situation very closely, but we believe that the underlying health and strength of the industry and our own remain strong. In times of complexity, with so much uncertainty, we need to work with different scenarios and be flexible to change and adapt. But for sure, we need to continue investing in projects that will give us a competitive advantage in the future, all while we are continuing to support our customers every day. And that is our focus.
That's great to hear. So from what I'm hearing is we will continue investing, but customers are our focus. Thank you very much for joining me here today, Till.
Thank you, Neil.